back to Agriculture Today. As always, we're starting off our Friday programming with K-State's grain market economist, Dan O'Brien. And as we mentioned last week, we are going to start with talking about the USDA's acreage and grain stock report. So, Dan, I know that the numbers of acres planted, we're going to cover that this week, and we're really going to focus on stocks next week. So let's talk about that.
Sounds good. Yeah, we'll look at how the stocks numbers are indicating what type of usage we had, particularly for feed grains, how much feed use. So we'll save that till next week, as it's more of a technical, in-depth thing to try to tackle.
Absolutely.
So if you look at this, and I think, Samantha, we've been looking forward to this report for a good long time. We came out of the winter months wondering about how much lower corn planted acres would be, how much higher soybeans might be, and we had pretty much confirming what our narrative was to market going at the end of the March report. Now we've come to the June 30th numbers, and we've had a switch in our narrative. We need to change how we're thinking about this, in that the corn numbers are about what we'd expected, but for both the winter wheat numbers and the soybean numbers, these reports showed planted acres below the bottom lowest bids of any analyst coming into the report. So just based on that, you would think in the long run that would be supportive of those markets. Again, lower acres, generally lower production, and you think in terms of supply demand balances, you'd see things tightening up. Now the futures, and we'll talk about that more later, the futures responded pretty negatively to almost all of this. The least negative, only 20 cents down in the deferred contracts for soybeans, but corn, again, July corn traded down 26.5 again, and this is really a new crop issue in terms of acres. D's corn down 34 cents to 619, 620. So that's a big deal, and that does give us new crop bids for corn across the state, still looking healthy, but some 595 on the low end, and up to say 665 on the high end in Garden City. So we still have attractive prices, but they're down sharply, really, from where we were at the high. So
sure. And Dan, you predicted the volatility of this. You mentioned last week that with this report coming out, for producers to keep in mind that there were going to be changes in these futures that we would expect to see.
Well, that's right. And it's a lot more heroic and positive to predict volatility and it goes to the high side. When you predict volatility and it goes this way, well, then you're a little more sheepish about that. But anyway, so the actual numbers for corn, we have a USDA estimate now of 89.9 million acres of corn planted. That's up just a little bit, about 0.5% from the previous estimate, and harvested acres of about 81.9 million acres. And from last year, the harvested acres figure is down 4%. And so now from here on out, we'll be watching the weather to figure out what type of a yield we'll get on those harvested acres. So that's kind of where I'm at. And I would say where we're at in the market, when you look at Kansas in particular, the USDA projected 5.4 million acres of corn planted, down 5.3% from last year. So that's quote a big deal. And I guess we kind of take that now, and now we turn our attention, as we said, to the yields. When you look at the soybean number, we actually have come in with a projection now of 88.325 million acres of soybeans planted, 87.5 harvested, and that's up 1.3% from that number of planted acre, about 1.3% from last year, actually down 2.9%, down a quote fair amount from that March estimate, and that's the surprise of the market. So again, the markets responded negative today, but if we have any drought scares, that number is going to play large in the next set of calculations.
And soybeans weren't alone in that, right? Winter wheat was kind of below expectations as well.
Yeah, the winter wheat numbers came in. Winter wheat planted acres of 34.06 are below the bottom end of the pre-report trade estimates for the trade, down 0.7%, 0.7% from the um, figures in the March report. Now the harvested acres, still pretty optimistic with regard to where harvested acres will be, but again, harvested acres down about just about 2% from a year ago. So we're full swing in Kansas, if not done harvesting. Now, even out in the Northwest, which is about the last part of the state that's harvested, you're seeing combines moving, still a lot of crops in the field. And, you know, you read the same harvest reports out of Kansas wheat that I do, you know, the week daily reports that come out, and a lot of mixed results, some tremendous yields, some very poor yields. In the West, whether wheat had a longer fallow period in front of it or not, made a huge difference. So I think we'll come in next and look and see where the USDA comes in with I think probably there'll be the July report, the August report, but really we hang our hat really on the September annual small grain summary for really figuring out where the markets are at. And with that, you know, the wheat numbers closed on yesterday on the market. Like, we're now looking at the September contract, since we're in the delivery period for July or just starting in on it. Closed down to 951, and that's the lowest it's been basically since end of February, early March. So again, harvest time, still a lot of shortness of wheat in the world, and you know, we talk about volatility. The measures of momentum in the market, something called relative strength index, down to 42 or 43 out of 100. If it's below 50, it's generally negative. But I guess my own thought is that we're in harvest time. We have wheat that will be moved just because of people, they don't want to pay commercial storage, or they lack storage otherwise, you know, on their farms. So I know where we're at right now in the midst of harvest. Right after harvest, I really wonder where we'll be on the wheat market in about 4 to 6 weeks but a mini market glut moves its way through. So we'll see where that goes.
Well, and you know, we've just wrapped up a lot of the key points of this acreage report, but another key point to think about is that they might be updating this acreage report as time goes on. There's going to be additional surveys that they're going to do.
Yes, major concerns about what was happening up in Minnesota, North Dakota, South Dakota. So the USDA, National Ag Statistics Service, will go back and re-examine and collect updated information, probably resurvey off in those northern states, and see how the numbers could change. And you know, when you try to look at any one crop that they're measuring, basically they're going to go after them all. You know, there's so much moisture and so much delayed planting that was going on up there, that they feel that these numbers aren't the final answer, that there's very likely to be some adjustments that'll happen out in August. So I don't think really the thing that you'd be most wondering about is if it ends up that there's such planting delays on soybeans or late planted corn that it took those numbers down more, particularly if soybeans are taken down more, then that'd be a big issue. And in a year where we're really concerned about what supply demand numbers are in the wheat market, if the spring wheat acres also decline precipitously. So you know, if there's a theme that you and I have been seeing here in the last several weeks, it's volatility and uncertainty, and this is only the acreage side. As we referred to earlier, the yield numbers now will come into sharp focus, and we'll see where that would take us. And we're in July, and we have to get through July and August yet to get out into fall, where we start to gain some more confidence in these numbers, and just a lot of moving parts yet in the grain markets.
Sure. So definitely still some time until we feel like we have some stability to us. We mentioned last week that I forgot to mention this, but we mentioned last week that we were going to talk briefly on ethanol, being that this coming up week we have a major holiday. So if you wanted to touch on that, Dan, that'd be great.
Yeah, we've seen ethanol prices remain sideways. Now, and that's been the case for the last several years here, last several weeks, excuse me. We still have ethanol priced in Kansas at 255 to 268 as of yesterday, basically June 30th. And that's markedly stronger than where we were basically back in the around February, March, when we were looking at about $2 a gallon in parts of the country, in Iowa and elsewhere, and Kansas as well. So, so generally, we've had ethanol moving sideways. We've had corn prices now moving a little bit lower. DDG prices have moved lower along with corn, but generally, you look at the type of mathematics that profitability estimates are based on for ethanol plants. And here you have steady ethanol, lowering corn input prices, and I think generally profitability off in that sector. And you know, a lot of things happening in motor fuel. We had a tax holiday recently, made some difference in prices. Are still above $4 in a good chunk of the country. Still at the Kansas ethanol plants. We're still seeing cash prices on the top end of 80. Well, the range given yesterday was 804 to 805. So we're over $8 for Kansas ethanol plants, and that's and generally for the major parts of the country of the Kansas that we watch, that'd be the highest price anywhere except in Southwest Kansas, where right around Garden City about 819. So strong ethanol demand, corn, ethanol plant demand for corn, and really indicative that that industry is continuing to move forward. So, while we're talking about that, usage of corn and export still strong, so I'm an economist. You get me talking on these things. I just would talk way too long on all the details of this. Overall, point is that even with high corn prices, our demand has held up decently, and so I think that we're just watching to see how much high prices for grains might choke off demand usage some, but so far other than for wheat exports, you still seem to be holding up pretty decently on the usage side.
Absolutely. Well, Dan, as always, we thank you for your time and the contribution that you make for these reports. They're very thorough and obviously contain, some very valuable information for those tuning in. So thank you so much once again.
Thanks a bunch, Samantha. I appreciate it.
Absolutely. Once again, that was K-State's grain market economist, Dan O'Brien, providing this week's grain market report. We hope you all have a safe and happy celebratory holiday weekend. Enjoy the 4th, and we'll be back with more next week.